Finally, every credit bubble bursts. They pop, and when they burst, they generally do it in a big way. It will be good for mines if the value of gold and paper currencies goes up, as long as the price of energy doesn't go up even faster. Also, keep in mind that this is how most mines that produce will be run. In other words, they will get lower grades instead of better grades while it is profitable to do so. There is no way to instantly make more money when the price of gold goes up. I think you need to temper that idea a bit and just accept the truth. One more thing I want to say is that gold is not very common. You could say it's less than 0.5% of all assets. According to today's gold news, Morgan Stanley says the price of gold is expected to keep going up. On October 10th, gold prices went over $4,000 an ounce for the first time, setting a new record high. They have been going up ever since. A drop of up to 6% on October 21st put an end to the rise. It was the biggest daily loss in 12 years. Still, the price of gold has gone up about 50% in 2025, making it one of the best performing investments of the year. The price hikes are a response to important policy, geopolitical, and economic events this year, such as tariffs, the conflict between Israel and Hamas, worries about the independence of the Federal Reserve, and the shutdown of the U.S. government. Morgan Stanley Research thinks the rally will continue and raised its gold price prediction for 2026 to $4,400 an ounce, which is a big jump from its earlier prediction of $3,313. The new estimate calls for an extra gain of about 10% from the beginning of October to the end of the following year. I don't know about you, but the fact that all the big banks are writing bullish news lately is starting to really bother me. It means that gold prices might fall even more this time. What do you think? Amy Gower, a metals and mining commodity strategist at Morgan Stanley, says that buyers are keeping a close eye on gold, not only as a way to protect themselves against inflation, but also as a sign of everything from the policies of central banks to the risk of war. We think gold will go up even more because the US dollar is dropping, ETFs are buying a lot of it, central banks are still buying it, and people want to protect their money in uncertain times. We are now going to show you the best parts of the most recent interview, but first, hit the subscribe button, share the video widely, and go to goldsilverstacks.com to get the Stacker's Handbook, which is the best way to trade the gold-silver ratio and stack effectively without having to rely on market analysts. Link in the reply that was pinned. Let's watch the show again. Tomorrow, real metal. He has to rent it from somewhere if he doesn't already have it. You should know that the rent has gone through the roof. Most of the time, they were around 30 to 40%. Some stories say they've gone up to 100% or more, which means there aren't any more units available to rent. The other thing is that there is a backwardation, which means that the spot price is higher than the futures price. At one point, that was worth more than $3, which made a lot of people very happy, which led to arbitrage. People who store silver on the COMEX might think, okay, let's ship some of that over and make money on the arbitrage. So that's why there are many stories about it. What I really don't know is how true they are or what. There may be some truth to it, but I think it's probably overstated. What I would say is that the difference between spot and futures prices has gone down to about $1. It has gone down a lot. In other words, it still means that there is a lack and that those who are short are being pushed. For one thing, most of the silver in the LBMA vaults is ETF silver, which is not what you want. Furthermore, people are interested in silver, which adds to the stress on the system. They think metal will go up. They probably feel like they missed out on the gold, so the silver is a cheap way for them to get in. They then buy ETFs. ETFs need to find the metal. And I think we heard last week that some silver ETFs in India stopped issuing new shares because they couldn't find the silver. Based on that, I think what we can really see is that silver is too cheap for the way money is right now. It's very clear about that. As a result, it is going up. You have to ask yourself, though, what people are going to do when the price goes up. Are they just going to make money? Maybe they'll say, I'm going to hold on to my silver because things don't look good for fiat currencies like the dollar or something. Gold is getting more expensive. The gold-silver ratio is 84 right now, but it should be less than that. Why should I sell my silver? So I think that a situation where prices go up could actually lead to more demand and less supply, especially with the rise of ETFs. This is because the supply has always come from weak users in the paper market. So, Jesse, I think this is an interesting case. It's a Giffen good, which means that supply and demand don't work normally when it comes to price. India has a lot of news today. India lets banks accept silver as protection with a gold to silver ratio of 10 to 1. This increases the flow of money around the world. India officially accepts silver as bank security with a gold to silver ratio of 10 to 1. This changes the way loans are made, increases demand, and starts a new era for silver as a global money metal. India has taken a historic step toward making silver valuable again by making it clear that the white metal can be used as collateral for loans from banks and other lenders. These new rules from the Reserve Bank of India will go into effect in April 2026. The move sets up a silver to gold ratio of 10 to 1. This is the first time that a big economy has officially recognized silver's role in modern banking. Along with gold, India's banks now accept both gold and silver. Indian families have used gold jewelry as collateral for personal and business loans for many years, especially in rural places where credit is hard to come by. The new rules allow people to offer up to 10 kilograms of silver or 1 kilogram of gold as collateral for loans of up to 2.5 lakh, which is about 3,000 US dollars. This includes silver, jewelry, and ornaments. The policy affects both banks and non-banking financial companies, which help millions of small borrowers. It sets uniform standards for valuation and paperwork to make things clear. Now, below are some of the best parts of the most recent interview. But first, hit the subscribe button, share the video widely, and go to goldsilverstacks.com to get the Stacker's Handbook, which is the best way to trade the gold-silver ratio and stack effectively without having to rely on market analysts. Link in the reply that was pinned. Let's watch the show again. So, I think you need to have a more realistic view of why you own gold or silver. They are only worth that much because they are money, which is why they are expensive. They can be used as money. Another difference between them and fiat currencies is that they are final payment without a counterparty. And if you think things are getting worse for paper currencies, that's another reason to hold on to gold. Whether it goes up or down by 5% doesn't matter at all. It's important to remember that gold's value stays pretty steady over long periods of time. What changes is the value of fiat cash, and that number has been going down a lot, especially since the Bretton Woods Agreement was broken in 1971. In terms of money, you had $35. $35 an ounce was the official rate. The number now is almost 4,000 or 4,150. That basically tells you that a $1971 or the dollar today is worth less than 1% of what it was worth in 1971. And that's something you need to remember. Things are not going to change for the better in favor of paper currencies.